This is Dan Stewart for your NORAM Asset Management Market Update, Friday, August 13, 2010. Well, it was a lackluster day on Wall Street, kind of slow and ho-hum. The Dow was up almost into the close, but at the very end of the day, it sold off slightly. It was down 16 points to 10,303. The S&P was down 4 to 1079. And the NASDAQ, the big loser, once again was down 16 to 2173. The Dow and the S&P were both down just marginally, but the NASDAQ was down 0.75%. Once again, it's the generals and the mega caps and the very large caps that are leading the way. Technology, mid and small caps are the weakest sectors. Oil was down 16 cents to 75.58. Gold was up 20 cents to 12.15, relatively flat. Silver was up 5 cents to $18.11, or 0.25%. Over on the Treasury front, 5-year 1.46%, 10-year 2.69%, and 30-year 3.87%. So the 30-year, folks, has come pretty significantly below 4%. You think that had anything to do with Bernanke's talking about buying long-term treasuries a few days ago and some big institutional bond buyers getting ahead of the curve? Just maybe. However, pretty soon it'll be time to short treasuries, so get ready. The U.S. dollar was up against the euro and the yen, but was down against the pound. Retail sales came out up 0.4% in July. Estimates were just slightly higher, but that still was good news because retail sales were negative last month. But remember, it was also back-to-school sales. Probably got a little bit of a boost. CPI index was up 0.3% in July, seasonally adjusted. That's coming from a negative 0.1% the prior month before. So even though the annual 1.2% CPI came out right at estimates and doesn't look like it's really moving significantly, month over month you go from negative 0.1% to positive 0.3%, and it means prices are creeping up. Remember, it is possible to have deflation in some categories, yet inflation in others, like food and commodities. Over in Europe, Europe was down with the exception of the UK, which was up just marginally. The Euro Stoxx 50 was down 0.5%, and the big loser was Spain, down 0.2%. This in the face of strong economic data from Europe, especially Germany. Europe grew at the fastest pace in 4 years. Germany blew out all expectations with huge growth. However, remember, the euro was weakening against all the major currencies, making their exports cheaper. But the last month or so, month and a half, the euro's been on a tear. So as the euro gets stronger, their exports get weaker. I think investors are smart enough and are looking ahead to the third and fourth quarter. This past quarter is just that, past. Over in Asia, it was up across the board, with the exception of Hong Kong, which was down just marginally. Shanghai and South Korea were both up 1.4%. Indonesia almost 1%, and India and Japan both around 0.5%. Japan's stock market advance today was tempered with worries about their strengthening yen. Hong Kong reported second quarter growth was better than expectations, and they raised their forecast for the rest of the year. Yet they were the only market down in Asia. Go figure. And this has been Dan Stewart for your NORAM Asset Management Market Update, August, Friday the 13th, 2010. Have a safe and enjoyable weekend.